Hello guys, glad to have you on board again. Today we're going to close that week looking at the weekly candle closes we might come across on major asset classes, and of course having a look at the anticipated close we may do on the crypto markets, because of course this one will last until Sunday and a lot can very well happen in between. So we're gonna need to have a look at this. So instead of just having a look at the same old fucking charts, I decided to just change the perspective today and just reversed the curve, so you make sure you don't have any bias. So in here what we're having is clearly the exact same conclusion I've been coming to recently, in which I very well forecast us to play this game and try to build some kind of resistance in here. It's still very early to consider done job, but I very well tend to believe that we're about to reverse, and we need to validate this. It's a very interesting cluster as well in terms of technicals, and obviously if we do get to validate, we're going to have to work out this area in here just a bit and then probably trend reverse out of this. If you were facing that kind of curve, would you really believe that this isn't a market top? I definitely tend to believe that this is exactly what's going to happen in here. Totally excessive kind of pricing in here. Then the markets tend to first show some signs of reversal, firstly breaking some supports. This is really looking like a trend and nothing close to a consolidation, because in a consolidated market this would never have looked like that. So we're kind of searching for the reversal point in here as long as we stay below that resistance, or in our case that we're trading the opposite, we're just waiting for a bullish reactivation out of that support, and that's pretty much what we could have right now. It's still pending at the, as we're talking about in that 8-hour chart, which is halfway through this expiration. So waiting for this to come, and for example if we could validate that kind of close and confirming with another bullish close breaking through the level, the important level we've been highlighting, which is 114, then that will be a decent sign that we finally worked out this area. Obviously anything in between, I mean, last time we had this to the downside and it didn't lead to a breakdown or break up in here. So God knows if this one's going to be the good one, could very well just be another fake pump or whatever shit this is. So don't overestimate this, don't over-understand this. It's just there's nothing to figure out as long as we don't make any candle close on top of those two, aside and away from those two boundaries. But it was just quite a little bit of fun, just because so many people would just assess this to be strongly and firmly bullish. No, to me this is exactly, I mean, I'm a speculator, so my job is to assess when the market has decent odds to reverse, and I don't give a shit about the ongoing trends. Ongoing trends is normally something I'm already profiting from, and I just let go until we reach out to the targets, and then I forecast the next move, generally is on the opposite side. So yes, definitely my job is to see those kind of structures, and I can very well tell you that this is most likely what I like to have in front of me as a reversal. We have absolutely no bearish strength in here, which means we're trying anything we can. But in a bullish perspective with the reverse market, this is definitely bulls losing their momentum until the bears take it over and reverse the trend to start. Guess what? Retracing to freaking Fibonacci levels. So what we would be trading in there is exactly what I expect to trend, what I expect to do on the crypto market. It's just you have to come up to those same conclusions. When you reverse a chart, if you don't get to the same conclusion, means you have a bias. So I don't. I mean, what I do when I buy this market is exactly what I would do, and the same conclusion I go down to when I analyze this market on the other side. I would say definitely an overextended market who's been trading for way too long. We've been pushing too many divergences, divergence, lateralizing, excess. We're now reversing, but we need to confirm. And to confirm, we need to have, in order to trend, remember that, in order to bearish trend, to mean that we've terminated the bulls, we've ranged, and now we'll go into the opposite side. We need to have lower highs, and then we'll build lower lows, which means what we're having in here is definitely not that. So the point we may eventually trend on that market is when we'll have lower highs, lower lows, and we'll start heading once again third time for the lows, which will pretty much not going to happen for now. But what we're going to do in between, we're definitely going to target Fibonacci retracement. I very well think we'll do, and in that perspective, you can very well forecast us to go first level, which is 14% Fibonacci. This one isn't automatically plotted by the indicator, so we're going to just do it. But let's assess it this way. So we're just going to make sure I've been using the right levels. So let's put back the magnet once again. Alright, so magnet to magnet blow. Okay. And just in here, what we're going to do is we're going to use 14.6, and just like that. Okay, so let's use basics and change that for 14.6, and I don't need the others. Alright, so just this level. Okay, where is it? It's exactly there. So it's, oh fucking hell, guess what? That's exactly the prices I was thinking about when I said we will probably head to this area. So we've got another technical information showing that next stop probably is going to be that first level of retracement, $280. So that doesn't mean it's going to happen. It's just my job is to speculate, and I need to have decent odds to figure out that speculation to be probable, and I have pretty fucking decent odds at the current stage. And I'm just waiting for prices to validate, and then we should initiate the end of that bullish move, bearish trend in the right side scenario, and we'll start to retrace. First retracement target is going to be breaking that high, getting to 14.6, which is in here. No, is in here, and what the fuck is that? Okay, yes, it's the ranging area. So yes, we're definitely going to go there. This is. I see absolutely no reason for us not to reach out to this area. We could not do that, but I very well tend to believe that we will, and that's just because mechanics, price mechanics asks for this. We've been over trending on this side. We're just going to start testing that trend again. And that level, despite the Fibonacci level itself, also has some price interest. We've been working in this area back then, and I definitely tend to believe that what we've done in here is just going to be broken up. So, lots of cluster heading into this 270 area, 2070, 70, 80. So, I very well tend to believe this is still where we're heading to. It's just, I don't know how it's going to look like. I don't know what the prices will play in between. I've got those in between levels, but definitely, to me, this is the most rational target. First target, and then second target, 400. And then the next and final target to me is going to be 600 for the speculative trades, meaning if we ever go there, for God knows what reason, if we were to go there in just a straight line, that's a possibility. Remember what the XRP has been doing, for example. So this is definitely something we could do. I mean, surging in here for God knows what reason, a positive news flow, or just a stop hunting, or FOMO trading. Don't give a shit. We go there, I'm out. It's simple as that. I'm limiting the trades in here. If the speculative trades go in here, I'm definitely profit taking. All right? And anything that happens in between is just going to be risk management. We go there, bearish signals, I'm obviously going to profit take. Simple as that. Okay, so partial profit taken in here, total price limitation in there. This is definitely where you put the maximum stop loss, or the maximum profit taking. You don't target more than that. It would be just stupid. Now that we reverse this, I mean, that makes sense. I wouldn't make just the same analysis one way or another. It's just a matter of time before we figure this out and we restore the bullish sentiment. All right, something that's going to build itself through gas. I don't think this is going to happen. But remember that I think we're going to just range in there for a little bit, but definitely 14.6 is where I think the market will head to. Aside from this, absolutely nothing interesting is happening. I mean, the euro dollar is just dying. And this week is pretty much very, very uninteresting. So still not breaking the highs, even though we had the potential, but we're not breaking the lows either. We've been breaking that trend line, but I very well tend to believe that this was kind of a wave 2 pullback. So we're waiting in here. Bears are holding up to their resistances, or bulls are holding to their supports. Kind of the most uninteresting battle so far. It's just remind me of the good old days in here before we trended. So we'll see about that. I don't think we, some people tend to believe that we're going to go there. I will accept that in terms of risk management, but I'm not forecasting this as the most probable scenario. I just we'll be ready to take that if it happens, and obviously I would take that as an opportunity to get more bullish. But I still tend to believe we're just going to range in here for a bit and then fuck up reversing a trend, just the opposite as what we've done before. And I think euro dollar is just the most representing thing about the entire forex market right now. The GBP USD is a big mess as well, going up, down, kind of in between trading, trying to figure out a direction, even though I think the long-term odds are very well to the upside. So at some point it's just a matter of time before that long-term trend pulls out of the short-term bearish pressures we do have. USD GPY as well, big mess. We're kind of saving us some time lateralizing before pushing more to the downside, as this was the plan. We've gone a lot further from this, but I still tend to believe we could range for a few months. It wouldn't necessarily be a problem, or we could just fall apart. All I know is that I still want to be bearish in that market, and anytime it surrenders, I want to be among those who will take the gains. USD CAD is kind of reversing in here, so it's trying to build itself a support, but I don't really think it's going to happen. This reversal we have in here has been happening after breaking down the trend channel, so we're just retracing and figuring out some bearish entries in any reinforcement that may come along the way. So I would suggest anytime we go there is a decent fucking bearish entry. So it's just speculative entry in here, but I'm definitely reinforced if we pull back out there. So I'm going to put it no way. I just want an alert. So starting there, I'll be ready to search for bearish trades in the daily charts. NZD is doing just fine. So the yen scenario is still hesitating a bit, but I think as well in here the long-term trend is about to play its game again normally. We'll see about that. And what else do we have? Gold and silver is just uninteresting as possible. In the SPX has been falling like knife yesterday, even though it's most likely Germany has been driving that price action. So I might have to review my previous forecast, which means today is going to be interesting. Remember that this is definitely what we're going to trade. Take that trend channel, and we're nearly at the bottom, and today I think is what we're going to head to. So heading into that low, there's going to be another risk management to me. I've already been profit taking, so I'm not going to profit take again. Sorry, I'm just putting a little bit of French in between. But what we're having in here is just a market trying to hold itself, hold on to its support just to maintain uncertainty. But the market doesn't like consensus, so everybody's just bearish right now, so we're going to have to balance this shit to have kind of an equilibrium in between. We want to have both bulls and bears, so now that the bulls have been overextending, we've got just bears. So now it's all about bears, 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 and guess what? We're probably not going to fall like a knife. We're just going to range in this area. That's what I forecast. So I still manage my risk accordingly. Still having a bearish bias. I'm not changing anything. I'm not going to switch bullish, obviously not. But I just think that we're not going to fall like a knife like we did back then. So be ready for some range action, for some trappies. And I wouldn't necessarily be surprised if for some reasons the US were ready to go slightly higher. Because I see that very low area of volume in here, 27.47. In which I still tend to believe we could very well reach out to this price just to fuck up some stop losses of too much aggressive bears who would probably put their stop loss right on top of the previous resistance. And guess what? That resistance is just a profit taking. So yes, it means we can very well have another top on top of this. We can go higher than that. So if you've been narrowing your stop losses already, I think you've just done a stupid mistake. The stop losses, as long as they are, to me, must remain in here, 28.50. And if prices goes there or near those prices, you shouldn't be stopped out. All right, must be on top of those resistance with a little margin in between to allow some stop hunting in there. If for some reasons, I don't know, we've got a good news, unexpected deal with China, with things like that, could very well drive prices to take down all the aggressive bearish stop losses, and I think it could go up to those prices. But I think 28.50 definitely not able to reach out to this. Not 50, it's 28.60, okay? As you can see, we've got two drops in volumes, in here and in here. So we can very well fill the first one, try to reach out to the second one, but normally we shouldn't set ourselves into the second one. So this is where the stop losses are. 28.65 is definitely, if we reach out to this volume area, I mean, it means we're going to go historical highs. And in that perspective, you definitely have nothing to do in the bear side. And in between, manage your risk, learn patience, because if it goes tricky and trappy, then if you're too aggressive, you're going to be among the losers. If you're lacking of patience, you're going to be among the losers as well. And moreover, if you end up being a switcher, then you're definitely going to be among the losers. So patience and respecting the strategy is definitely what is needed to be done in here. Work out with your own psychology. I know it's hard. I know you're going to have a lot of pressure. The market may be trappy. You want this to play fast and get out of the speculative area ASAP, but be aware that this, from what I can see right now, probably not going to be the most probable scenario. I think we're going to market make this area, just fuck up some minds, and whoever is going to be stupid enough to go impatient, too aggressive, or switching is going to be lost in the process. That's it. Individual stocks, I don't nearly give a shit about that. We're just going to talk, having a quick look at Tesla. So Tesla is playing sideways because we got an important thing to come forward. To be honest, Tesla, we all know about that. So just some people just don't want to see this, but it's obvious. On the 1st of March, Tesla is going to have a huge obligation deadline, which means they're going to have to pay for bonds, pay for previous debt. And they obviously don't have enough cash to do that because they're still not making money, even though they've been selling us this shit for 5 years. It's 5 years. I mean, the Tesla profitable thing definitely has been lasting for 5 years. I've been hearing this so many times, and it never fucking happened. So, at some point, we may have to just fuck them up, or we're going to hold on for another set of drops, for another set of hope, in which we're going to cut some slack to Tesla to eventually, 10 years from now, having some profits. I mean, no, it can't. I'm just being funny in here, but to be honest, yes, I think at some point Tesla could be profitable, but in between, there is a huge gaps between reality and the market's expectation, and in a bearish market, I very well tend to believe that Tesla had everything they needed back then because the market was bullish. We had hopes, and this is among the stocks that were attracting attention. So we had lots of bears, okay? It's definitely the most shorted value on Wall Street, but it's also the one that's been gathering a lot of gas, a lot of hope. They wanted this thing to work out. So in a bearish market, it's going to be harder for Tesla to pick up some money in some obligation requests, or trying just to lend some money in here is going to be a rising concern for Tesla in the future. And this is definitely why the prices have been pushing down. And to be honest, $360 is the area you need to have in mind and to bear in mind, because 1st of March, they're going to have to pay for some loans. They've been taking some debt. They've been creating and using to create some stuff, but still they haven't sold enough stuff to pay for that debt. So, problem ahead, they're going to have to lend more money to pay for the previous debt. That's not a problem in the corporate sector. That's something that happens pretty much often. But the problem with Tesla is that they've been fucking with mines for 5 years. So at some point you can just let a company lying to you for 5 years. At some point you're just going to ask for more for higher rates. Okay, you're definitely going to lend them some money, because I don't think Tesla is going to die tomorrow, but you're going to say, okay, now the profits you're having are not enormous, you're just having some huge goals, yes, long-term goals, but in the short term, we're having a bearish market, and a lot of people need money, and I'm going to choose whoever I'm going to send that money. And if you want to be that person, then this is the rate I want. And obviously it's going to be a much higher rate than they had before, meaning it's already hard for them to create cash, to be positive cash flow with the underlying debt they have. So if that debt load is increasing, then it's definitely going to go worse. So another time they might be just failing to create cash and just fuck up investors one more time. So the thing is that we've got a very dangerous cluster in here, decision cluster with Tesla. I don't really know what the future will be. All I can tell is that we have two very attractive magnets for Tesla. We've got this one, which is the previous support, and if we fuck it up, you can definitely know that the market will just lend money to Tesla but at very high rates, and definitely gonna decrease profitability. So obviously prices will fall apart accordingly. It doesn't mean the company will die. It's just the company's valuation will drop accordingly because we're expecting the profits to be even more delayed, just like it has been every fucking time for Tesla. So if it's just one another of those time, then we're definitely gonna break that support, and we'll see how far we can go. We can go up to the previous support area, 180, which I think we can very well go down to, or maximum drop going to 160, in which buying Tesla is very interesting. And we're basically dying in between. Okay, so this is 360. Basically, that's the value the stock must be to at the 1st of March in order to pay for the bonds, in order to pay the bonds by creating stocks, okay, by selling stocks to the bondholders. And in that perspective, if we're below 360, it's not possible to make convertible bonds to pay for the debt, which means if we're there, they're going to sell stocks to the bondholders to pay for the expiration, or if we're below that price, they're going to have to lend money. And as we know, lending money is going to cost way more than it was back then. The debt load is going to increase, so profitability is going to decrease. And if profitability decreases, I don't see how then we could hold that support. So we're going there. It's definitely a breakdown, or at least high probability to do so. We're going there. Probably a lot of bondholders who are going to be paid with shares will probably decide to sell. Okay? So the thing is that I think going there or there, it's a sell. It's just we can go there first and then sell. All right? And in here, there's definitely still the risk for us to break up. Still risk management. Run you if Tesla goes historical highs. I'm definitely out of that game. I don't want to be among the guys who hold a selling price on a market that will just reach out for new highs and searching for magnificent skies and stupid valuations. So I'm still trading to the downside. Not that I'm a perma bearish, not that I want to take down Tesla. I don't give a shit. I'm just here because rationally speaking, I think there is money to make to the downside, so I'm in the short side. And I will be among the buyers afterwards. I'm selling because I think the valuation, decent valuation for that company is much lower than they currently are pricing, in which reason why I'm selling to just buy at better prices. Prices I think are worth it, and simple as that. The rest of it I just don't give a shit. You know everything about my portfolio, so I'm pretty much bearish on most of the US assets, and we'll see how they perform today. And I'm just patiently waiting. So forex is a big mess. AUDNZD is playing us sideways, okay, so we don't really know what the hell's going on in here. But to assess the long-term technicals, I think this is how you can say this. I'm gonna go daily, okay, so you can definitely see this. All right, so in the daily chart perspective, what we're having in here is that long-term trend line that we've been trying to fuck up to the upside 2 times in a row, failing 2 times. So I should have expected this some way. I never thought it would. I thought this was good sign for us to break up, so this is why I was firmly bullish. But to fail basically pushed us to break, and trying a breakdown attempt. So far we're holding this, which means we've been breaking but not surging to the downside. We tried, and I still try to figure out what the fuck was that thing earlier that year. But anyway, right now we're just trying to oscillate. We've got that long-term, that underlying support, okay, which is basically the previous trend line, okay, the triangles parallel, and as long as it holds on, I see no reason to panic, okay? So it's if we ever get to breakdown 2, that will accelerate, and the big problems will be. But in between, I think we had a cluster in here with that trend line that we clearly broke through. Is now acting as a support. Even though it's a bearish trend line, we've been breaking through this, which means we cannot reaccelerate for this. So we had a strong reactivation cluster in here. As long as it holds, I think we have a decent bias to at least neutralize this thing. But as long as we don't get to the positive area, consider this as a range. Okay, we've got the support area. We've got the resistance area in which bears are trying to hold on to install bearish trend, and bulls are trying to fight back to reintegrate the triangle and bullish trend afterwards. You can be damn sure that if we fuck up the bears in here, we're going to trend. This is definitely the last time. This is a bull versus bearish battle. We're very fucking mature, and at this stage, we never had bearish traps previously. We never trapped the bears. Anytime the bulls have been taking it over, and now we're trapping some bears, and we're testing the resilience of bulls, which means afterwards, I think we're gonna have an asymmetrical response, which means we're going to have way more bulls than bears, so we're probably going to trend after this attempt if we tend to reactivate bullish. Obviously, if the bulls surrender, we're going to bearish trend also. That's a possibility, and we never know. But I still need to pick a bias as I'm a trader. I'm not here to just comment the market and say what's been happening or what is happening right now. I'm talking about what is about to happen. Through my own eyes, using my tools to speculate and limit the risks. So I'm still trading to the upside. I think those exits are very red flag. We've tried to push through them. So far we're failing, but the market isn't showing that much strength so far either, because we've already broken through yesterday's lows, which is not a capitulation sign, but just the bulls aren't that strong at the current time. They are trying to build the momentum. They do have a positive momentum bias on the daily charts, but as long as we don't go higher than that, meaning getting in here and going higher, I think there is no decent odds. I think it's just neutral, all right? And we're playing and gambling in that area with that median area. Below this, bears are still having control, and bulls will try to push back. In that area, bulls are in control and bears are trying to fight back. And at some point, one of those two will fail, and then trend will emerge. What the hell else do I have to talk to you about? Yes, the fucking boons. We definitely have to talk about them. So let's not have a look at the boons. Let's have a look at the yields. I just made a long-term video about the boons and the bond sector for the French users. I won't have time to cover this for you guys in English today, even though I may be trying to do so, and I'll see if I have time today. But I have a priority for the PDF manual, which I want to terminate as fast as possible, and there is still a lot of work to do in here. So if I have time today, I'll try doing it. If I don't, I'll focus on the PDF. But there is definitely a problem with the euro area pricing in the boons and the bonds in general, which I expect that something is going to go wrong with the market and the ECB. And what's happening yesterday with the German bonds, with the German index, I mean, we literally we've fallen like a knife, and we keep on falling today, meaning that something definitely goes wrong. I mean, look at that. Germany is literally falling like a knife. So it definitely says something when you have that much volatility. Something goes wrong, and I pretty much expect the boons will react. We're in a parabolic risk taking, pure bullish trading in the boons, and I expect this thing to they're going to have to pick a choice, all right? So this is the choice they have to make. I'm going to go straight to the conclusion I've gone down to for the French users after 1 hour long explanation video, because there is a lot of processes to understand in here to fully assess the depth of my ongoing scenario. But to be honest, in here we have a choice, okay? The ECB will have to either change the policy stance or dig a little deeper in there, and probably is going to cause the explosion of the euro area afterwards, because we're already trading at near negative rates in Germany, and that's a big of a concern, because this economy is now showing real signs of recession. It's not early signs, we're recession trading into Germany, which means we have a recessive economy that prices nothing for yields, which is absolutely abnormal. Just like we said for Tesla, I mean, when something is at risk, you ask for higher rates. So in here we've got a problem, because it's just a conjunction of structural problems that's been piling on top of each other, and it's been leading to that negative rates. Because we had the ECB QE program, who's been basically fucking up all the pricing of bonds, and especially the German bonds, pushing them to negative yields because high demand with a very low emission of debt from the German governments. So it's an offer-demand problem that we had in here. Very low offer and strong demand from the ECB for those bonds, which been driving the bond prices lower to a level they don't nearly reflect the reality. Now the QE has been ended, but still, for some reasons, the investors just keep on playing the same game, which is very dangerous because now we have a recession coming along the way for Germany and negative yield. So what the fuck is going on? Something definitely wrong. If we're heading recession, we probably should price something closer to 2 or more than 2% for a 10-year yield, which we don't. So kind of a problem in here, and the ECB will have two choices. Either they will start all over with a new QE program, or not necessarily QE, but they expect to be TLTRO or something like that. If they do this, then we're going to go even more negative yields, which is going to be quite of a concern because the European monetary aggregate is just far different from the GPYs, because basically the conclusion I got down to for the French users is that we're kind of playing sideways in between their American model of pricing the bond market, which is pretty normal, and I would say it's a standard. And on the opposite side, we're trying to play with an extreme way of bond pricing, which is the Japanese standard, which is pretty much a nasty and very dangerous experiment of forever negative returns, and see how long this can last before blowing up the entire Japanese economy, which is now 300% of GDP in debt, which is, I mean, at some point, if we can go 300, then how about 1,000? That's just how stupid we are right now. It's obviously going to end very badly for Japan, and the problem is the economic side. I mean, the Japanese GDP is just literally nothing compared to the European GDP, which means we cannot play the same game going negative forever with the ECB thinking it's just going to do fine. Obviously we can't, because the economy sizing is not appropriate in here, so it can't work, but the market think it's going to work. So the market is expecting a TLTRO, is expecting another accommodation thing from the ECB, switching to negative rates, never ever rising rates, even though we have a recession showing along the way. So the thing is that ECB thinks there is no recession, so they think there's no rate, there's no way to rising interest rate. We just need to fasten this slowdown in economic growth, which is a big problem, because if we do have a recession, means that the way they've been driving monetary policy at the ECB has just gone all wrong. And when that much amount of money has been in play, and obviously when the market moves against the ECB, things will go nasty. And I think it's definitely going to play through the bond sector, which is an absolutely lack of liquidity. We know that there is absolutely no bunds emitted right now, so very low liquidity, absolutely stupid prices, very dangerous parabolic pricing scenarios, in which we know this is not going to end well, but people still tend to keep on buying the bunds or rising the price. It's not buying bunds, it's just no one is exchanging the bunds actually, it's just the prices are rising to see how high they can go before fucking it up entirely, because it's not relating to anything like a real life. We shouldn't be negative rates or heading to negative rates for Germany. That makes no sense. The reality is closer to 2%, which means the further we go away from 2%, the harder the return to reality will be. And obviously, if you go moving 200 basis points out of a yield for an economy, for a government, then it's going to go as well for debt, it's going to go for companies, for corporate debt. So it can be a massive problem for the Eurozone if we just don't return to neutrality ASAP, which means we go negative rate. I think the Eurozone is just going to explode 2 years from now at best. So that's it, okay? Huge problem, and we got the strong decision cluster in here. What that cluster is definitely this. We're trading monthly in here. You need to assess this. This is not short-term trading. We're really macroeconomic projection doing in here. We've got a decision to make. We're trading that support. I never thought we would go down to this, but we did. And what we're doing is trying to terminate the bearish trend to install a bullish retracement. So first we fuck up the bear trend, which we've been doing, and we try to install high lows so we can trend to the upside and retrace. What we're going to target is obviously the retracement. Fibonacci retracement, first one, third one, and I think we can retrace up to this one, 2.23, which is a 50% retracement of the latest economic cycle, downward movement in debt, in rates, in interest rates, and I think this is the area we're heading to. Okay, we've got a trend line, the cluster. This is definitely where we're going to go down to, up to. This is where we've got the cluster, sorry, where we've got the the bearish context. So definitely this is the area I think we're heading toward too. I don't think we're going to last there long. It's just we're going to touch this price and just reverse out of here. But this is the target I'm heading to. And in that perspective, if my scenario is right, we need to build a higher low. So I think we've got decent support in here. We shouldn't even be there, but God knows what reason we've been trading here. And I think anytime we can just reactivate and wrong foot whoever the fuck is buying the bunds right now. Just as we've done earlier, I mean, just figure this out. If you think you've got a bias, reverse, and would you buy that shit? I would definitely not, because I think we've been overplaying. I remind you how to count down trends overextended. You just, if you don't know what to do, you just count down for the market tops. 1, 2, 3, 4, 5. So we're odd number, which means we're probably terminating a trend in here. If we don't, means we're going to go 2 sets of highs on top of this, 1 and 2, and that will be the 7s to sell. I don't nearly think it's going to happen for a simple reason. We're already too far into some parabolic moves in here, and it's a very dangerous pricing. So I think we're mature enough to trade on the opposite side and try to assess this trend to show up, which means weekly chart context in which we're trading is definitely what I think the market is going to sell. So buying, all right, but the bunds are the opposite, okay? This is the yields, and the bunds are pricing this way. It's reverse from the yields, okay? And this way, I think, this is why I think bunds are just about to retrace in here, go a little bit sideways, and then trend and fuck up that trend channel. Okay, wave 1, 2, 3, trend, and then 4, 5. All right? Definitely think that this is what's about to come. I'm not saying this is going to be, I think it's going to be ugly, because it's a long distortion that we're going to have to get ourselves out of. I think it's a major change in the way bond traders will see the market, because if we do head for a 200 basis point move, that means something changes, and it's definitely mean we're heading toward recession. I know the market doesn't want that. I know it's the bad word not to say right now. Either you're just going to be a witch that we absolutely want to burn down the central place. But anyway, I think that's exactly what's about to come. Just people don't want to face the reality. But at some point, reality will just show itself no matter what. All right, sorry about that. So I'm having, of course, I'm not just speculating out of nothing. That's not how you trade. In here, I'm just trading a psychological pattern, which means I see huge distortion in terms of market perception versus reality. And despite that, this is generally in which you're going to have to speculate a little bit more carefully. So I'm not fully leveraged, risking my entire life out of this scenario, and definitely has an invalidation, because if we break through those high, I'm definitely fucking out. But I don't nearly think it's going to happen. But anyway, we're testing the limits right now. We're basically wave 2 pullbacking, which means we're breaking trend lines and trying to make people think that this is bullish, as this is just going to reverse. But that's how trend builds. Okay, you leave out of hope that the previous trend will keep on going forever. You just fuck up this hope, and then the opposite trend will emerge. And first, it's going to head for retracement of the previous level. And as I said, I think 50% retracement in here is just a minimum. Anyway. So we're good with the bunds, and I think that's pretty much all I had to say. So obviously today is going to be an interesting session, and as I said, think about the trend channel. Okay, it's definitely something you need to have a look at. All right, obviously we're going to break through this. Same analysis. Would you buy that market or would you sell it? Definitely. What would you do? Just be honest. What will you do with this? You're definitely buying that shit, no matter fucking what. I said back then that in here we could find some support. We did short-term support finding. Now we're having another set of supports. Okay, in here we can clearly see the market has been supporting in there. We've tested this thing. We've got another supports and another one in here. It's definitely what we've been pricing. So if we're expecting the market to go a little bit lower, it can. But in here we've got a strong support. Okay, it's been resistance, support, and we've been putting ourselves ahead of this. And obviously there is another set of level, and this is the last one we can go down to, which is in here, and the last time the market has been supported. So if we had to go in here, you need to allow this to be played, okay? Because that's the maximum level I accept us to go. okay, and we can try to go there, and this is why my stop loss is pretty far from this currently, because I don't think we're nearly able to go there, but we could. And so far I'm just waiting for us to break this. As we will break this, I'll rise my stop loss and I'll have available cash to reinforce. For now, I'm just waiting for us to deteriorate this trend, which means I would like to have rising bottoms and rising peaks. And whenever we'll have that, we will eventually be ready to set for a trend and reactivate this bullish trend, which is the damn bearish trend on the real market. Alright, so once again, remember about that. This is really the easiest trick in life, in trading. If you have a bias, reverse the charts. And if you don't come to the same conclusion, means you definitely are wrong footing, or at least you're taking it the wrong way and you do have a bias you need to work on. I'm definitely getting to the same conclusion both ways. In here is the kind of market I want to support, so definitely the kind of market I want to sell in the opposite side. Alright, that being said, I think we've been covering all the major things, so I'm definitely keep on going with the bond scenarios, and I'm targeting specifically the Euro bonds, and I don't give a shit about the American bonds. This scenario is over for quite some time. I've been taking huge gains on this one back then, but now I don't think it's interesting anymore. I think the Euro area has to catch up with this, so this is where the money should come from. The forex market is uninteresting as hell, but I keep on playing the same game. I mean, bearish dollar, but I'm just waiting for a bit. I don't remember if I got to explain that to you in English, but we will. So I think the underlying current scenario is this. Remember that when you're ranging, in here you need to assess bullish range, bearish range, or neutral range. To me, it's a bearish range, which means we're going to exit that range from the bear side. In my perspective, I've got decent odds showing up this way. We've been really fucking the context in here, and now that we're pullbacking, I think we're just trading minimum 61% retracement to sell. Okay, that's the minimum required, but you always need to sell in context. Okay, so I would say for now, odds are for us to go a little bit higher next week, and 87 in terms of DXI, and I think this is where I'm going to sell. Again, the dollar with a stop loss on top of the previous level. Obviously in here I'm going to go leverage, which means this is where I go speculative. Now I think we're ready to trend, so I'm going to go a little bit more aggressive, maximum speculative leverage in here, and then I'll be ready for the breakdowns and trend installation, in which I'll go fully leveraged. So dollar is kind of heading toward last stages of validation before heading into trend. So we're early trending in here, trend preparation. The yen index as well, trend has been emerging already in there, so we're kind of consolidating before going up again on that trend, and we'll see how this plays out. And that's basically all I had to say. So cryptocurrencies, waiting to see if we manage to close a day, to hold a daily close on top of 114, and as long as we don't, there is nothing to talk about. So really, at least 4-hour candle close will be the minimum. Daily would be better, closing on top of 114, and that's the first step toward validation of the bottom creation near the current lows. Obviously, as long as we're remaining between the two boundaries, there is nothing to talk about. I wish you guys a good weekend. See you again in Monday, and obviously if things tend to go crazy high on the cryptocurrencies along the weekend, I'll definitely put you some updates into Telegram.